What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online, as usual. Today I'm going to talk a little bit about, well, it's eventually going to turn into a rant about Lofty and what my problems are with the site. Not necessarily new ones, maybe not even new info if you've been paying attention to all my videos, but that's not where I want to start. I know I get there a lot eventually, so I just wanted to give you that warning. In the end, I'm going to actually share with you a new platform that I found that I think is pretty interesting for anybody. I know a lot of you have talked about trying to come up with creating some competitor, or maybe just listing a few of your properties separately online. I'm actually not sure if it's a good option for that or not, but it's something I came across when I was just looking for some images for this basically rant. So I'm going to share it, and hopefully, if anybody has any experience with it, I'm really interested to hear about it. Anyway, um, I think if you are new to this space, some of this discussion might be helpful up front. And then if you're somebody who's in the trenches in the Lofty Discord every day, a lot of the stuff you're going to hear me talk about them is not going to necessarily be new, but maybe there will be some new context or spin on it. Um, you can tell every time I'm invested in one of these DAOs that starts to do something that I think is a mistake. I've started to realize, it's very much a trend. It's the same issues, but I think that over time, my thought process and the way I want to talk about it might change a little bit. Or, I'm trying to give a couple of different angles on the same thought. So anyway, first of all, I wanted to just get started with, I like this little napkin financing site. I had never seen this, but they have a lot of good little images that help me uh, when I just want to have something on the screen while I'm talking about this stuff, right? But so they're just talking about real estate investing, different ways to do it. You have properties directly, you have REITs, you have mutual funds, you have private funds. Um, and this is, before I came across Lofty and Arrived and Mogul and all those sites, this is pretty much what I understood the ways that you could invest in real estate. Although, excuse me, they don't have syndications on here, and I'm going to talk about that as well. But so, you could just buy your whole properties by yourself, just like, I mean, that's what I've been doing for the last 20 years. And I think that that's a perfectly reasonable way to go about it if you have the capital and you don't mind, or when you're starting out, really putting all your eggs in one basket. I don't love, doing that, but I think that until now, it's been one of the few ways to really get into property ownership, especially good investment properties. Um, One of the only ways to do it, right? You just have to sort of make that big leap from 0 to 1 with whole properties. You could buy REITs, but if they were public REITs, then okay, you get a lot of liquidity, you get some diversification of properties, you have professional management, um, right? And so, what are the REITs? Real estate investment trusts. Basically, all the investors, they buy shares in this entity. That entity goes out and buys properties. This is like really dumbed down. Like each one of those properties is actually owned in a separate entity. We talked about that another time. They send the rental income back to the people, and then you get paid in dividends. And there's some people that think, oh, REITs are, they are very tax efficient, and it depends what you're comparing it to, right? If you're comparing it to owning properties directly, I would say no, right? I've paid more tax on REIT income than I ever have. Usually, when I own investment properties, it actually saves me money on my taxes. When I own REITs, I'm paying some level of tax, although less, possibly on the dividends, right? Or maybe that entity is not being double taxed when it's giving me the dividends. Is actually what I think the main thing is. I hate talking about taxes because it's one of the things I very heavily rely on my CPA for. I feel like I do understand it well, but I'm just never wanting to give tax advice on it. Actually, some a couple of people have asked me to do a little bit about that, and I'm thinking about it, and I think I probably will. But just because that came up here, I thought I'd mention it. Um, but it is something. Nothing. Please don't ever take anything you see on my channel as tax advice, and definitely, if you're invested in any of this stuff, get a CPA or tax advisor. Don't do your own taxes. I did my own for probably the first 15 years I was a real estate investor. And, partially because, I took a bunch of tax law classes in law school, and I worked at an accounting firm all through college. And so I felt like I really knew a little bit about it. But, after having a CPA for the last 5 years, I should have just always had one, right? It's such a small cost of doing business to just get like the right advice. Um, Anyway, before I forget, please like and subscribe. In the description to this video, I have links to all the places where I'm investing in fractional real estate online. Please feel free to use any of those links, but do your own due diligence on the sites and any of the properties that you see me buy or that you see on there, right? Just because I'm buying it doesn't mean that you should. And just because I say I'm not going to buy it doesn't mean that you shouldn't, right? You want to do your own due diligence. Also, in the description to this video, there's a link to the Discord that you can join, where it's a generic fractional real estate investors discussion forum where we talk about a whole bunch of different sites, not just one particular one. Okay, so back to this. Um, yeah, so that's basically REITs. I've never liked investing in REITs. Um, it's very difficult to know what they're actually worth, right? Okay, if it's publicly traded, there's going to be tons of data out there. There's going to be analysts that are digging into it. They're not all going to say the same thing. It's just, it's not, when I buy a home, it's pretty easy to figure out what that home's worth relative to figuring out what this big pool of assets is worth. And a lot of times they trade at a premium to their net asset value. So like if you look at all the value in the REIT, well, it depends on what part of the cycle we're in. Sometimes they trade at a premium, sometimes they trade at a discount, but there's very often that you're paying more than you would if you just bought all the underlying assets. Um, in addition to REITs, there's funds, right? Funds are uh, somewhat similar, and this one is an example of a debt fund. And I just pull up images. I just did a little image search online to just kind of find stuff to help me talk about this. I don't know anything about any of these sites that I go to, but usually there's somebody that's talking, trying to explain how something works. So this one's showing a debt fund. The same exact setup works for property funds, right? You have a whole bunch of private investors. They pool their money into this fund. Again, this fund is typically going to have professional management, somebody who's doing a good job picking properties for you, making all the decisions. You're going to just be getting paid a return. That it's completely passive. That fund is then going to go out and buy individual properties. Again, those properties are almost always going to be in individual entities as well. And then the any proceeds from those properties, whether it's refinances or rents, are going to move back to the fund and then will be paid out. So REITs are typically meant to last forever, right? It's like just an ongoing business. Funds usually, and it's not always true, but usually real estate investment funds have a time period because the property is going to be bought in that fund, they're going to be sold, and over time, all the funds are going to get paid back out. But again, I don't like these because it's very usually you're putting your money in before they own all the properties, sometimes before they own any. So it's very difficult to understand the value in that fund, right? It's just a matter of trusting this professional team. And then you have syndications. Syndications are where you have one investor or developer who acts as what they call the sponsor, goes out and finds the project, manages the project, does everything. They raise money from individual investors, and so why this is different is you have a bunch of individuals, but they're all just investing in one property, right? It's not going into a fund first and then spreading out to a bunch of different properties. Of all of these methods of investing, I've always preferred syndications. I think, well, no, I've preferred whole properties, but if I were going to put my money into something somebody else controls, it's always going to be a syndication because, again, I want to be able to understand the value of that specific asset. With syndications, the sponsor really makes all the decision. Usually, everybody else that's invested is in a limited partner status, or they have no decision making rights. There might be some like very dire circumstances where they get to kick out the sponsor and take over, but in general, they're just silent partners putting their money in. And for all of this is very just gross overgeneralization of what's happening, right? The way you get paid out, it's going to depend. There's a bunch of different structures. It could be anywhere from you're just getting a preferred return, meaning they pay you, say, 8% no matter what happens. A lot of times there's some preferred return and then some after a certain point, depending on how profitable the deal is, you might get some additional return on top of that. Sometimes they have what they call a waterfall structure. All that's beyond the scope of what I want to talk about today. I just want to give you like, okay, before we had fractional real estate, these were really the options, right? Whole properties, funds, REITs, and then it's like, private REITs, public REITs, syndications, and that was really it. Uh, and so, and there was this other fractional ownership, instead of where we had, they were called ticks, where we all own these properties as tenant in common. Most of the time, those looked a lot like syndications. Um, Honestly, I'm trying to think if I even remember what the benefit was of doing it that way, and I can't even remember. Ticks seemed like they came and went, maybe in the 90s or something. I feel like there weren't very many by the time I got into the industry. Almost everything was just regular syndication. And I'm honestly not sure why. I don't know if it had to do with tax consequences or if there started to be lawsuits regarding it. I don't know. It'd be something if anybody knows more about ticks, let me know because I'm not sure why that. I remember learning about them in school. I remember seeing like a few of them in practice, but I don't really, I don't know. I don't know what the benefit or why not. So definitely feel free and jump in if you know more about ticks than I do, which would really mean like it wouldn't take a whole lot, right? So I'd be interested to hear. And then, okay, now, over the past 4 or 5 years, and really it's been a little longer. Initially, you heard it more discussed as crowdfunding, into real estate than it was as fractional real estate. I'm not sure when that terminology really changed, but what you ended up having is this fractional ownership. This to me, I think, created a situation where uh, I was hopeful that it would be better than a syndication in that, okay, it's very similar to a syndication in that we all own little pieces of it, right? A bunch of investors just invest in a single property. So it's very easy, again, to value what that one property is worth. And this is the company I'm going to actually talk a little bit about at the end. Um, but yeah, you can figure out what that individual property is worth, and then and then you understand what your risk is, what your business model is, and then you have these other people that own it with you. Makes it so you can get into it cheaper, but typically, it's not like a fund or a REIT where you have to like try to ascertain what these other business risks are or what this like pooled value is. And so this is very attractive to me, right? Especially if I could just do this, and just hold the property full cycle, I'm perfectly happy with that. And that's sort of what is, Mogul. It looks a lot like that, right? Right now. So does Arrived. Um, those two, these with the fractional ownership, it's interesting because there's different models, right? Some of them do follow more like Mogul feels more like a syndication because you have these professionals that are picking the deals that are coming in there. It's not just any old deal. We don't have to figure that out ourselves. Um, but it is, it's still, we're just all, we're not getting some limited partnership different return, right? Everybody that's invested in that deal is getting the same kind of return, although there is a fee going to Mogul. So you could argue like Mogul does feel a lot like a syndication where, that's just like open up to individuals to buy. Same with Arrive, right? I mean, Arrive feels sort of that way too because we're not making very many decisions now. We are going to get to vote on a sale or a refinance some point down the road, is what I believe is the case with Mogul anyway. Um, but we're not making day-to-day decisions. We're like a Lofty on the has gone all the way to the other side where you can make any decision you want. It's just all has to do with voting. Nobody's picking properties for you. It's just whatever gets brought to the platform. It's why I talk about this a lot. It's why the average deal on there is just a terrible deal at the price that it's brought on there at. Um, and that's sort of what I thought Lofty was, right? But Lofty is very quickly morphing into something different where I'm no longer just getting fractional ownership in a property. The DAOs, I'm getting fractional ownership in a real estate investment company is the way a lot of the co-owners are starting to look at this, to where they are deciding to do all sorts of things other than just, okay, we're going to invest in this property that we all picked. And so that's what's really starting to get to the point where my main thing is I'm always trying to assess risk, right? And so that's why I focus on doing videos about due diligence on properties. And so I'm investing in a property. That's my goal here in fractional real estate. More and more, that's not what I'm getting on Lofty. Um, and I just wanted to, I wanted to share this chart again. I always share, this is on Lofty Assist. You can see that the total value on Lofty has been dropping for a while. This is the total value locked in liquidity pools, both tokens and USDC. I think it's a really good indication of whether money's moving onto or off of the platform. It's not, most of the movements don't come from staking and unstaking. Most of the movements in these pools come from buying and selling, right? So uh, the more um, the more selling there is, there's the less, the more people are selling out, the less money that ends up being locked in the pool. Now you will see that there was a pop on the 18th. Well, this is because they launched four new pools, right? So um, it looks better than it really is, and we've already lost most of that value already. So, one of the reasons I think this is happening, if you look at some of the DAOs that have had, a lot of sellout, or some of them have had these issues. Some of them haven't. I mean, I think there's all different reasons why they are, but I think that also the platform itself and the ecosystem is really strapped for cash. There's a lot of DAOs that aren't doing well. They have a hard time getting new investments, in the form of capital calls. And so people are trying to get creative. I understand, I don't think anybody is doing anything nefarious for the most part. I think there are some people, but I think for the most part, people have good intentions, and they're just trying to, save Lofty or save all these DAOs, or they're like, hey, we're all in this together and let's work together. I think it's really counterproductive from a couple different perspectives, and that's what I wanted to just share, right? And so, what kind of stuff am I talking about? Let's get into that. So, like, okay, Bowmanville was one. This is a deal that the property had a real problem. It had a manager that we didn't really know what was going on with it. There ended up being a lot of debt that to a contractor, and I actually am the one who proposed to sell it, and just, be like, okay, let Earl do whatever he wants as far as selling goes, work out a price. He did it very quickly. I was glad to see that. And I sold out as soon as there was a pop. But since then, there was a vote to, like, okay, let's just keep the money in here, put it into the Earl DAO. If you don't know what that is, you'll just have to look into that. But it's basically, it's not really a fund. It's another DAO, but it is, it's sort of, it behaves very much like a real estate debt fund, where, there's a bunch of people lending to the DAO, or, and actually right now it's mostly other DAOs lending to the DAO, and then other DAOs borrowing from it. Um, but so now that's the only asset in this pool, right? There's no long, maybe a little bit of cash, but there's no longer a property here. So if you bought this, did your due diligence on the property, expected to get paid out when this sold, and then, okay, 60% of the people that were paying attention voted to not give you your money and to do something else with it. Um, Whether or not buying the Earl Dial makes sense, I'm not telling you that I think that's a bad investment. I think it's a bad idea to do those inside each DAO, right? I think, and I've talked about why in a number of videos, so I'm not going to belabor that point here, but I think, from the investor's perspective, I can't ever. Well, let me give so this Ohio 3 property package, we voted to put one up for sale. And then there was all sorts of different ideas and proposals about, okay, let's invest some in Earl Dow. Um, I don't even remember what some of the other things were. Some buybacks, which, I think that they're okay, but I think that's a math thing, right? And I think a lot of times we're doing bad math when we propose buybacks. There are certain situations where I think they can make a lot of sense, but it better be one of the most discounted properties on the platform to want to talk me into doing that. But so this didn't end up selling yet, so I don't know what the end result is going to be. Although I think that the vote that we ended up with on this wasn't too bad. There's a small buyback. Most of the money is getting sent back out, and I think that makes the most sense most of the time right now. And this is what got me a little thinking about this today, is So this is actually one of my biggest holdings, or it is my biggest holding on Lofty. Um, Not anywhere close to it in general because it's just a fractional deal, but I've got 530 tokens in here. It's one where I bought into this. We were already talking about selling it. Um, I've been accumulating shares in the hopes to sell it. We're in the process of getting it sold. It's not under contract yet, but I'm confident that at the right price, we're going to sell it sometime soon. And I think the other co-owners are finally on the same page of like, we're just going to keep moving the price until it sells. But now there's a proposal like, okay, once it sells, instead of dispersing that cash, let's move it into this other DAO. And I think it's just a really dangerous precedent because if I'm trying to assess my risk in buying a property and now all of a sudden I'm stuck with something else, like it's there's just no way, it feels like I'm being forced into a fund or into a REIT, but without getting the benefits of the fund or a REIT, right? Because I don't have this professional team that's doing it. It's just whoever can sway the crowd, right? At any given time. Um, and it's like you compound your risks by moving, by not moving the cash to yourself and then making that next entity bet. And whether or not the other investment is a good investment or not, I don't even think matters, right? Like, because it is, the for this particular proposal, it's something that I are also own um, tokens in. I don't own nearly as much as I own in here. And so one of the things that happens is you just inherently have this conflict of interest, right? So there's always going to be one of the two DAOs that is uh, better for the exchange, right? Because I mean, not always, but in most cases, that's going to be the case, right? I mean, your counterparties, and so if I own a huge amount of one DAO and a small amount of the other, what makes sense for people that are in the opposite position of that, right, which own a lot of Leclerc, which is the other DAO involved, and a small amount of Odom, we're going to have very different economic outcomes. And so it just, and so that I think that's a problem. But the real problem for me is I came to this platform to invest in fractional real estate, right? I want to buy this property that I picked out, and then when we sell it, I get cash, and then I go buy my next property that I picked out. I did my due diligence on that property. I'm not ever being forced into something that's a fund or some other decision. I didn't even bring up Garden Gate here, where they're moving some into Bitcoin. But as we move down this path, um, you can imagine you could it almost doesn't even make any sense to do due diligence on your particular property because you could buy that property tomorrow, it could get listed for sale, or they do a refinance and take most of the value of that DAO and move it into whatever somebody feels like, as long as they can convince 60% of the active voters, right? And in some of these DAOs, it's a really small number, right? I mean, it seems like the quorum rule does not get enforced ever, as far as I can tell. I don't know if it's a rule in every single DAO either. I know it's been brought up a few times, but some of the votes that have gone through for some properties that I'm involved in, my tokens, which are not a large portion of the thing, have made up 30% of the votes of the people that actually voted, and that is surprising to me that then you can just basically drag all these other people's money along with you to something that they didn't sign up for, right? And I think the reason I think this is all a problem, when like in the DAO that we're talking about moving money into from Odom, doesn't even own a piece of real estate, right? We might be buying into something that's going to end up getting sued if we try to back out of a sale, uh, or we might move forward with a sale of a asset that a lot of people think is overvalued. And the proposal is to pay full price for the tokens, for most of the tokens, buying some at a discount, but buying a whole bunch at full price. So, whether or not that makes economic sense, because I don't disagree with the math of it, like, especially if you're somebody who owns about an equal amount of both, and you feel confident in the fact that this would get paid off. I mean, maybe that makes sense, but it's just a bad precedent to continually um, make this not, it makes it not a true fractional real estate investing platform. Now it's just I'm buying into all these little funds or all these little real estate investment companies that, we're just doing whatever they feel like it. And that's, I don't know, to me, I think it's a big part of the reason that you see money moving out of the site, right? Like every time, like one of the things that is really clear, there's a lot of people that don't want to have any debt in their DAO, right? They've bought properties with no mortgages. That was a huge appeal to them. Somebody's coming in and voting to put a mortgage on it, and so okay, now I've got to get out of that deal. Like you're greatly changing the risk profile of a deal whenever you do that. Um, so it is, it's which makes it very different from like if I'm investing in a syndication, typically I know what that capital stack looks like going in. I'll know if there's a proposed refinance as part of the plan. So it it's almost like we're getting the worst of both worlds, right? Like now we are getting the sort of risk profile of a REIT or a fund, because we don't, we're okay, we're buying into one thing and we have absolutely no idea what that's going to end up as. But we're not getting the benefit of having this professional team that's really in charge, and where everything kind of falls back on them if something goes wrong. And then, I think the counter argument a lot of people bring up whenever I talk about this is, oh, well, it's liquid, you can just sell it, right? And this is the stupidest response. Like, I mean, it makes me so frustrated because yes, I could sell Odom right now at 21 bucks a share, but when we sell it on the market, I'm going to get like maybe $34, maybe 33, maybe 32. Who knows what that number ends up being? But it's significantly more than what I could sell these for, right? And so it ends up in a situation where you can't really plan your cash flow at all, right? Like, okay, if I owned this property outright, well, one, it becomes way more difficult to sell because of all this voting, right? But okay, regardless, let's say by the time I get to go sell it, I think, okay, now I have on this one maybe 12, maybe $15,000 coming my way. Um, I know there are some people that have meaningful amounts of money in their account that like they want to move it and do something with it. And all of a sudden, okay, that sale's coming up. They make plans for the cash, and then people in the DAO vote to do some other ridiculous plan with the money, right? I mean, it just doesn't make any sense if the platform is fractional real estate, right? If you want to say, no, we're just investing in all these little companies and each one happens to start with a particular property, um, that's a different business model. It's a different proposition. It's certainly not what I have any interest in investing in, right? So, like, if Lofty continues to go in this direction, I'm definitely going to be out, because I think in real estate, the number one way that you outperform is by avoiding risk. It's not by getting higher returns, because because you're never going to have a 10 bagger in real estate, or you're rarely, right? You're definitely never going to have a 100 bagger. Uh, but you will go to zero sometimes, right? And so the way to protect yourself or the way to outperform is avoiding risk, not by, all these other more entrepreneurial efforts, right? Because it's not a business, it's a piece of property. And so, I don't know. It becomes like really confounding because the thing that I find attractive right now on the platform are these really discounted deals. But it seems like every time I get into one with a plan to sell, somebody has a different plan for that cash. That makes it so I'm no longer just buying a property that I can then flip, right? And so I think that the people that are mostly motivated to do this, they have a plan that Lofty is their main, that's basically where they do all of their real estate investing, and they're trying to keep the platform going. And, it's like they're trying to help other DAOs. I got accused of, being selfish for Odom today, which is silly, right? Like if I'm representing a certain company, this LLC, what we should be thinking about is the interests of this LLC that we're voting in, not the interests of all of the other LLCs involved. Um, so I thought that was a little bit it's a weird comment. It's actually not the first time someone said it to me, but it's just not the way I bought this particular property, right? That's the goal. And if that's not what we're getting, I mean, that's fine. It is just one, they should change their messaging entirely. It should be, hey, buy a real estate company that started with this property, but who knows what you're going to end up with. And by the way, the price is never going to be worth what never going to be equal to what the asset value is. So you're not really going to be able to sell out at any good percent. I don't know. It just it makes it it's frustrating to see because the idea of it is if implemented well, it could be it's such a like it's such a good idea. It could create all these great benefits for us as investors. But in it, and this is not even a knock on, well, it is. I mean, Lofty could fix this by just like how lenders that lend to, most of the time, if you make it have a commercial lender lending to an entity, they're going to say, okay, that has to be a single purpose bankruptcy remote entity. You can only have the property, FF&E, cash and cash equivalents. Nothing else can be owned by that entity. Like, I mean, this like that type of restriction happens all the time in the real estate world. Lofty could say, if you want to list on my platform, you follow those rules, right? And then it would create a situation where your investment in a DAO really is just an investment in that piece of real estate. But the way it is now, where it's like, okay, there's no restrictions on what people can do. Um, I'm investing in fractional real estate companies now. Uh, and what is even weirder is it's not one company, it's I'm investing in all these other ones, but there's a ton of common ownership and there's small groups that control several of them, um, with disparate levels of ownership across them all, right? And so I just think it's really like opening the whole platform up to a lot of abuse by allowing by allowing transactions across the DAOs. Like, I mean, if you think about when I have investment properties in real life and I keep them in separate LLCs, which is something I've done quite a bit, I'm never having those LLCs interact with each other, right? They're never lending to each other. They're never buying stuff from each other. Um, if there's any movement of funds, it all comes to me. And if I want to reinvest in one or the other, then that happens, right? And that is, I think, the most efficient way, right, to move the cash back to the individual investors, let them reinvest it. The only reason to not do that is you think that you know better what people should do with their own money um, than they do, right? And I mean, I know there's definitely some hubris, and there's definitely people that believe that, right? They're like, oh no, no, I've got the best plan for this money, even though you should just get it back and then you reinvest it wherever it goes. And it also creates this, especially because of slippage and whatnot. It ruins certain opportunities because you end up with these big chunks of cash buying certain DAOs or certain things where if everybody got their money back, some people might buy some of those tokens at a really good discount, and other people might go somewhere else with it, right? They might go to another platform, but the individual owners of that DAO would all get the best result by their money going wherever they can find the best return. Definitely not by all putting it in the same spot if that creates some slippage or price movement in that spot. So I don't know. I know I've sort of went over this before. Hopefully this doesn't just feel too redundant or ranty. I think it's I've definitely had great conversations with several of you that understand this point. And I think the people that don't are more focused on just really well, a couple. I think there's several different things, but I think the biggest thing is the people that I feel like are missing this point the most are people that don't seem to really understand how what risk adjusted returns are, right? They're comparing total returns all the time versus really thinking about, okay, all these layers of risk we're adding, is it in, is my additional return equal to that? And if I'm only compounding my return once in a way that I could do outside of this transaction, but I'm at the same time I'm compounding my risk in a different way. Uh, I feel like that's being lost on people. I don't know. Anyway, I think that's all I really want to say about that. Now, to this is, I think, was a really interesting thing I came across, and this is from a couple years ago, but this company seems to still be going on, and it's just how to launch a fractional ownership platform. If anybody's familiar with this company, um, they use real estate as their first example, but they also have like airplane fractional investing. Oh yeah, I mean this is funny to me. Okay, imagine if you signed up for NetJets, and all of a sudden all the other co-owners were like, you know what, we're not going to have a jet anymore. We're going to sell that and buy a yacht. And well, 60% of us agreed to it. So you bought a jet, but now you're stuck with a yacht. Like that would be mind blowing, right? But that's the sort of thing that we're seeing happen on Lofty. Um, I think the idea of fractional anything can create very efficient, like great markets for investors if it's done in a proper way where you're truly restricting it so that it feels exactly like I'm just buying a piece of this property, right? Not I'm buying a piece of this property maybe, but if I sell it, I might not get the money that I sold it for. I might get a little, I might have to trade it for something, So anyway, but yeah, they have these, and I don't know anything about this company. I'm curious if anybody does, but they have this, these different packages. So like if you have something, they basically help you white label crowdfund it. Um, I don't know. I thought it was pretty interesting. If anybody has any idea about this, uh, let me know about it because it looks super interesting. It made me wonder, like, I have one entity that's got some loans in it, like that are just like mortgages that it owns. And is that something that I could launch on here? I don't know. I might just decide to talk to them. I don't know. The more frustrated I get with Lofty, the way it operates, the more like it starts to make me think about, okay, what would this perfect setup be, right? And I mean, Mogul is very close to it for me, but there's no secondary market, right? There's no liquidity. They say they plan for that for next year. If that shows up and it's done even a little bit well, maybe I only ever trade on Mogul until something else comes along, and I'll still probably do Sol's Lot because it's a completely different product. Um, but yeah, I mean the way I've already been frustrated with Lofty, just their management and their slowness to handle problems, and I mean like the ULD is now going on almost a year since the problem was identified, and no resolution still, but all sorts of other stuff. So that was frustrating. But now, I mean, we have the solution to the Yom problem. I think is uh, creating because people got a little bit creative in solving the problem. I think it like unleashed this new level of people wanting to do. Sometimes it seems like people are trying to be creative just to be creative, right? Like it's like we're just trying to create this complex deal because we can, um, when there are simpler solutions that are, in my mind, much less risky, especially for the individual investors, right? And I think that's where the focus should always be, right? The individual investors are the clients on this platform. Um, I mean, I guess you could say the DAOs are, but then again, if that's your client, that's not a platform I'm interested in being in, right? It's not. I don't want to invest in a bunch of little real estate companies, right? Because I have my own real estate company. Like it's not. It's and I definitely don't want to invest in a bunch of little ones where who knows who the management's going to be next month, right? It might be a different group of people that bought some and made new decisions. So I think it's just really, but so anyway, the more frustrated I get with that, the more I wonder. I've talked to a couple people that are thinking about building competitors. I know that at least one group that is working on building one. Whether or not it will be better or not, I mean, who knows? But I don't know. I found this interesting because I mean, I do have some assets that I could put up if if it was really out of a box. I have no interest in starting something from scratch. Um, I know there's some people that are trying to build stuff like on top of Lofty Rails, which again just seems really strange to me because I don't think that they do a particularly good job. But I get it, right? Because you don't want to like spin up your own thing from scratch because it's going to take a lot of time and work. Um, I don't know. Now that's got me just kind of off on a tangent. I know it's probably a very small few of you that are thinking about doing something like that, but because I've had I mean, I bet there's at least 10 people I've talked to that are like seriously considering some sort of launch of, trying to create something that's a competing product. And so if anybody's looked into this, I'm super curious about it. I mean, I'm old and lazy and not really going to do this, but I don't know. It like the promise of Lofty is so great, right? Like what it could be if done well is like, I think it could be an amazing product. But I think without like the right protections in place, I think we're just going to keep seeing this, right? I mean, so many people are, I mean, you can just see like certain DAOs. So a lot of the big owners have been selling out of a bunch of DAOs. Some of the big people who I know had a lot of money in there that I talk to pretty regularly through Discord, some through DMs and whatnot, have just said, yeah, I'm not putting any more money on. And I had been in that position up until last week. For a while, I hadn't put any new money on. I did because Odom got so cheap, and it looked like we finally were getting serious about selling it. And now it's like, okay, well, that plan is gone, right? Because we're going to roll that into something else that maybe may or may not trap that that cash for who knows how long, right? Everything could go perfectly. Like I'm not saying it's a bad plan. I'm saying it's a bad plan within a DAO, right? It's not. It's just moving us away from being a fractional real estate platform. Again, it's just like now we're just investing in these little companies that can do whatever they feel like in real estate. And I don't know anybody who, if you told them that's what they're doing, would be excited about doing that, right? Okay, this is what you're doing. You're investing in a small company. It currently owns one asset. The management's going to change whenever the controlling stake changes, which could be daily, right? Different people could buy and sell daily, and then and it doesn't even have to be that they don't even have to own 60%. They might just own 15%, but that's that, so few people vote that, okay, now they're going to control it. Um, they can keep this asset, sell this asset, buy any other asset, incur whatever debt they want to, essentially do whatever they feel like. Uh, and the price is never gonna reflect the actual asset value. So like, it's if you want to sell out, you're not going to do very well, especially with the gigantic fees that come with buying and selling the individual tokens. That's the business model that we're in right now, right? That's the value proposition we are being offered in the current environment. That's just not at all exciting for me, right? That business proposition, that value proposition is, I just I don't know anybody who'd be excited about, okay, if you define it like that, and that's really, it's hard for me to feel any other way about it than, who are we attracting, right? And who's going to stay in it? Well, I guess the only people that will stay in it will be the people that are really into doing these things, right? And want to be able to control other people's investments along with their own, right? Aren't just happy with taking their own cash out and putting it in the next deal, but want to be able to move other people along with them. Um, some of them, I think a lot of them, it is just thinking that, those people that aren't doing anything, that they don't know what to do with their money and you know better. I think that's some of the thought process. I know some of the times, and I don't think this is the case with the one I was just talking about now, um, but I have seen some of this stuff happen where they're really trying to control one DAO to move money to another DAO in a way that I, I really think is impacting things in a way that is like just it's due to a conflict of interest of owning more in the other than in one. So anyway, um yeah, I just don't see how that's going to be exciting for anybody. I think that the more of this that we see, then the more of this we'll see, right? We'll just see more and more money leaving the platform because who knows what we're actually investing in anymore. I mean, I certainly don't, right? I thought I was buying real estate, right? Little pieces of real estate. But now I realize, like, well, I kind of am, but I kind of am just being forced to own whatever people agree to, right? It's no longer like it's one thing that, okay, if we're going to make some decisions about this piece of real estate together, like, okay, we're going to change the business model. We're going to, which even that I think throws some people off. We're going to sell it. We're going to, if we already have debt, I mean, that's one of the things I think you could in the DAOs, when you form them, it could be one that this one can never take on debt, or it can, right? Or it is limited to the amount of debt to, bills incurred that it doesn't have cash on hand for, or, capital call debts or something like that. Anyway, there's all these ways that you could restrict what could be listed on the platform in a way that makes it so people are truly just investing in a piece of property. Um, I think I've said this way too many ways now. My computer froze at one point in time. You probably could tell, but I tried to talk through that little thing. Anyway, I warned you it was going to be a little bit of a rant. Hopefully, hopefully some people are thinking about this in a little bit different way than they were before. And one thing, it's like, okay, if that is just what Lofty is going to be, and there are a small group of people that seem very happy that that's what Lofty is going to be, you're just going to lose a lot of the investors that are people like me that actually just want to own a piece of real estate and do that real estate deal and then get to decide what's the next thing we're doing, right? Like it shouldn't be I have to spend a bunch of time convincing a bunch of people that no, I actually should get my cash back. We shouldn't go and move on to the next venture as a team, right? Like that if that's just like what happens every time we have an exit, um, I don't know. I don't know what we're doing here. It's just not. It's not at all like. Um, it is. It's like we're in all these little REITs or all these little funds where they're just going to do, but without the benefit of, the professional team there. So anyway, that's it for me for today. Until next time, I'm just going to keep making mistakes so that you don't have to.